if we are in an uptrend, okay, if we're in an uptrend, say this is what happened, because price does not move that perfectly. So this is what it would do. Okay, we had a break of structure right here. Okay, we had a break of structure right here, and then I told you, I told you. Now, to determine the right order block, there needs to be liquidity fed into that point of interest, which means now, can you see these equal lows? Okay, can you see that?
Yes, I can see that.
Okay, so we have equal lows. So we know that equal lows will be taken out. That's basic smart money. You know that,
Yeah.
right?
Yes.
We do not buy from equal lows. So now, if you have an order block right here, would you trust it?
No.
No. Why?
Obviously, there are a lot of chances that the smart money, the institutions will take out their equal lows because
Yeah,
a lot
for
of
sure they'll do that.
stop losses are there.
Yeah. So now what we will do is we will determine something right here. Simple. Below it. Because now you know that this will be taken out. So that's it. So price will take out all of this liquidity and then tap into this. That is it. So it's not that hard. You see how liquidity has been fed into this POI right here. You
Yes.
see now there are stop losses. Now these stop losses have been fed into this POI, which means now once these stop losses have been taken out, price will, which means the market makers are now in profit because the retail traders or the breakout traders or anyone, the people who trade support and resistance, now they will place their stop losses right here, right?
Yes.
If they buy from this equal lows, their stop losses would be right here. Okay, so now where their stop losses are is where our entry point is. Okay, I hope it's clear.
You are not
So
audible
then
clearly. Wait.
now,
Now you are. Yes. Like it start when you were explaining this
okay,
something
I'm
like
sorry
that.
for that.
It stopped.
Yeah, there's some issue with the connection. Can you
Yeah.
hear me now?
Yes. So can you explain from here again, like what you were explaining here?
Can you see?
Yes.
Yeah, sure, sure. So now, can you see how liquidity has been fed into this POI?
Yes.
Because now the people who trade support and resistance would view this as a support. Okay, and then
Yes.
people would even look at this as this M pattern. You see that?
Yes.
This M pattern line. All of those crazy stuff. Okay, and people now even the breakout traders would place their sell stops below this. So now you see how liquidity has been fed into this POI. We have
Yes.
all of these stop losses resting just above it, which means now you know that price will do this. It will take out all of these lows. Now what they do is to trap more and more people into this. They'll come back down and then they'll even give a reaction from these equal lows, which means now even more traders would jump in,
Yeah.
right? They'll give a huge
Yes.
reaction like this, and then comes this, the manipulation. The
Yes.
manipulation straight into our point of interest, and then boom, that's it. You see, there needs
Yes.
to be liquidity resting just above or below it. Now, in this case, there needs to be liquidity resting just above it. You see that?
Yes.
How
Yeah.
liquidity is just chilling. It's just chilling above it. You see that?
Yes. This
Okay.
markup looks like one of the recent trade you took on GU.
GU. Yeah. I'll show you. So we'll go to the 1 minute time frame, and that's like magic. I'll show you everything on the 1 minute time frame because you can stack up orders every time. You would have seen my channel, right? Like I
Yes.
take
Yes.
orders out of everywhere.
Yeah.
So this is what I do. This is basically what I do. That's all. Okay.
Okay.
I'll just show it to you because once we go into the chart examples, you understand it better, and you even have the recording so that you can watch it, rewatch it, and then once you back
Yeah.
test, you'll see what I'm talking about. Yeah. So and then on a lower time frame, I'm sorry, on a bearish market, this is what would happen. Price will come back down, and then you see it creates this little resistance right here, equal
Yes.
highs, equal
Yeah.
highs, and then it will come back down. So now, would you trust any of these order block? No, right? Because
No. Yeah.
what is the reason for you to trust this? There, I told you, if it's a high probable point of interest, there needs to be liquidity fed into it. Okay, there needs to be liquidity fed into that point of interest. Now, you see, there's nothing. No liquidity has been fed into this. No liquidity has been fed
Yes.
into this. But which
Yes.
one has liquidity resting below it? See that? This, because
Yes.
there's a ton of liquidity above this. This is a liquidity pool, and then people would even do this.
It is.
Yeah, what's it?
Your voice was stucking again. Like.
Ah, shit. There's some issue with the connection. It happens. Okay. Now, can you see how this resistance is being formed right here?
Yes.
Okay, which means now this acts as a pool of liquidity because we have tons of stop losses above this.
Yes.
Okay, so now we can expect this. We know that equal highs has to be taken out. Okay,
Yes.
so now the stop loss would be our entry. So price will do this. Now, what makes this high probable? What makes this point of interest high probable is the liquidity resting below it.
Yes.
Okay, so now price will come back up and then boom. That's what they would do. Okay,
Yes.
okay. Now,
Sometimes
yeah,
something like this might also happen that this is our order block, and like the
okay,
price went with a lot of momentum, and it came like down here, and it created liquidity here.
yeah,
It will
and
also
then even
be.
this, yeah, even this would make it high probable because now we have equal lows just below this.
Yes. Okay.
Okay, okay.
Yes.
Now, so once it comes to liquidity, okay, once it comes to liquidity, not only double tops and double bottoms act as liquidity.
Yes.
Okay,
Yeah.
now what the retailers have been taught is this: if price comes back down and if it breaks structure, right, like this,
Yes.
and if it retraces and then if it breaks structure once again, okay, if it does that, now retailers, okay, I'm talking about retailers, how they have been taught in their textbooks is that this low is a strong low because it broke structure, it retraced, and then it broke structure once again. Okay, so now
Yes.
retailers would view this as a strong low. You see that?
Yeah. But even we view it as a strong low now.
I don't. I don't.
Yeah, I
So I
also
have
do.
a lot of reasons to.
I learned it in
I'll tell you why.
Phantom.
Phantom. Okay. Now they would view this as a strong low. And now what the breakout traders would do is once they find a strong low, okay, they'll place their sell stop below it. Okay.
Okay.
Okay. They'll place their sell stop below it because why? They think if now this is a strong low, and if it breaks, they'll think price has to continue going lower. That's how they would view it, right?
Yes.
Now we will have stop losses of the people that bought from this low. Okay, that would be around here. Okay,
Yes.
because now we are the ones who are trading intraday. Okay, we are the ones who are trading intraday, and only we trail our stop losses. Okay, like we take it higher and
Yes.
higher. Now that's what we would do. But most of the position traders or the swing traders, these hedge funds and stuff, what they do is they trade on the higher time frames because they have a lot of money to risk. They'll
Yes.
trade on the daily time frame or the 4 hour, and I don't think they'll go below the 4 hour time frame. Okay,
Okay.
now what they would do is once they find a strong low, they'll place their sell stops below it because now they would view this as a strong low, and they'll think if price breaks it, it will just keep continuing going lower. It'll keep continuing going lower. Okay,
Yeah.
that's how they would view it. And then, so do you know what an inducement means?
Yes. They taught it in Phantom. It basically acts as a place where people will enter the trade, so that
Yeah,
and the BFIs use it as a place where the orders are induced basically.
Induced,
so
yeah.
that they
So
can take the liquidity created by the
yeah, what
orders.
what an inducement actually means is like the market makers or the banks or anyone who controls these markets, they will induce people into doing something wrong. Okay, now you see
Yes.
this thing will be seen as a strong law because now the inducement is very very important because if you know where the inducement is, okay, if you can like once you look at the market, if you know where the inducement is, you can enter anywhere anytime. Okay, even on the 1 minute this happens and even on the seconds time frame this happens because price is fractal. Okay,
Yes.
okay. Now we have this law. I'm talking about this law, this specific law. Okay. Now breakout traders would view this as a strong low. Okay.
Yes.
And then they'll place their stop loss below it. Okay. And then they'll even have their sell stops below it because they think this is a strong low. Okay. They'll even have
Yes.
their sell stops below it. And then even smart money traders would get trapped. I don't think Phantom and the NZ they taught this. Even smart money traders would view this as an order block, right?
Yes. Yes.
And then now even you would look at it as an order block, right? Because you see
Yes.
it has everything, it has all the
Yes.
confirmations. Took out liquidity from all of these lows,
Yes.
okay, and then it broke structure right here, okay, it
Yes.
broke structure right here, and it even has a little bit of imbalance. You see, it even has some imbalance. So now we have all the good reasons to sorry, we have all good reasons to consider this as a strong low. Okay, we have all the reasons to consider this as a good order block, right?
Yes.
Because it took out liquidity and then it broke structure. It even has some imbalance left. Okay, but what's missing? The inducement. Where is the inducement? You see that
Uh,
there is no
like
inducement.
in
Liquidity has
Phantom
to
they
be fed
teach,
into the POI. Yeah.
that this can be an inducement. Like this is
Okay.
liquidity,
That.
trend line liquidity.
Okay. But now there needs. That's it. I told you. Even Phantom will not teach you this. Imagine you saw this as an induced trend line liquidity. Okay, that's fine. That's trend line liquidity. Okay, that's trend line liquidity. But and then imagine how many traders would have looked at this like that. This is trend line liquidity, and it took out liquidity from these lows and it structure. So now smart money
Yes.
traders would view this as a good order block, right? So
Yes.
now imagine all of the new people to smart money because I would always wait for confirmation. Okay, I'll wait for evidence of
Yes.
reaccumulation or distribution. Okay, and then imagine how many people would have done this, the newbies to smart money. Imagine how many people would have done this. Okay,
Yes.
because it's a very clear order block, right? And then
Yes.
now see, because now these days there's a lot of smart money traders, not retail. They do now. Most people do not use retail concepts. Okay, they use smart money. Well, now
Yes.
that's what they do. Now even in Jet, they make their own names. They'll call it a FUVIC or something. They call it a full-bodied candle. They tell all
Yes.
of these like rebranded names, but the real thing is this is just an order block because ICT who was the one to come up with all of this. Okay, so this is just an order block.
Yes.
Okay, and then now imagine how many people would have looked at this that way. We have trend line liquidity. And then, okay, now smart money traders would view this as a good point of interest, right? Because
Yes.
they
I
have
also would
every
have viewed
reason.
it as a good point of interest.
Yeah. So then ask yourself if it was that clear, and if the
Yes.
market makers do not want us to make money, would they give it
Yes.
to you that easily? Would they do
No.
that? No, right?
Definitely
So
no.
now,
Yeah.
definitely no. So now imagine how much of liquidity would be resting below this low.
Yes.
Okay, imagine how much of liquidity is now resting below this low. Now, even the smart money traders have been trapped here. Okay, the
Yes.
reason is, yeah, the reason is this. They'll do this. The new people to smart money, they'll do this because that's a 30 people stop loss. They'll think, okay, that's fine. And then now even the breakout traders have been trapped here, right? Now they'll view this as a strong low. I gave you the reasons why. Okay,
Yes.
I gave you the reasons why. And then now what's missing? The real inducement. Okay, an inducement means now. Okay, now this is trend line liquidity. That's right.
Yes.
But if people bought here or here or here or here, now would they place their stop loss below this? Is there any reason for them to do it? Like,
No.
no, that
Yeah.
does not make sense. So now how can this act as liquidity? Even this, if even this was a trend line at that point, now how can
Yes.
it be liquidity? Now the people who bought here would have taken their profits, right?
Yes.
After this break of stocks, they would have taken their profits. So we need to have a real inducement. By an inducement, I mean a trap where even the smart money traders, the breakout traders, the position traders, the swing traders, the hedge funds, all of them have to get trapped. Okay, all of them. Now
Yes.
you see how much of liquidity is lying below this low. Ask yourself, how many people would have viewed this as a good order block, and how many
Yes.
people would have looked at this as a strong low. Okay, it's not only you and me that's trading. There's like millions of people that's trading, and
Yes.
nowadays because of this the COVID thing, many people are into trading, right?
Yes. Yes.
So now, so now people would now imagine how much of liquidity is resting below this low. How much of liquidity? Okay, and then now like once a new trading range has been created, okay, we need to identify where the real trap is. Where is the real inducement? By inducement, I do not mean all of this trend line liquidity or equal lows or anything. The real inducement, the real trap, a trap where even the smart money traders would get trapped. Okay,
Okay.
and then now we have that, and we have this order block right here. Like now, what's special about this order block is that now liquidity has been fed into this POI. All of
Yes.
this liquidity has been fed into this POI. I hope it's clear.
Yes.
Okay, but now,
Yes.
okay. So does it make sense so far?
Yes.
Yeah.
It makes sense, but like then again, I'm getting confused in structure then.
Yeah, structure plays a major role.
Yeah,
Structure and
because
liquidity.
here like broke the structure here, right?
Well, yeah,
Yeah, but then so then it will be considered as a strong low. Then if we break this, then it will be a break of structure, right?
that is the inducement.
Yeah, that
That
is the
is the inducement.
inducement. Yes, I can
Yeah, see,
understand this,
you're getting
but
trapped now.
yeah.
You need to know market structure very well because
Yes, that is the
on
problem.
on the daily time frame, like I told you,
Yeah.
this was the real price swing from this low to this high. I told you
Yes.
anything in between would be
Yes.
intermediate.
I'm not able to hear you if you're speaking something.
Hello, can you hear me?
Uh, yes, now I can hear you.
There was some problem with my connection. I'm sorry for that.
Yeah, no problem.
Okay. So now you see, even you get trapped here. You'll view this
Yes.
as a strong low. But
Yes.
I told you, this is a real price swing from this low to this high. And
Yes.
everything in between, okay, everything in between is internal range liquidity,
Yes.
right? Now you
Yes.
see, now you see, even you got induced into doing something wrong.
Yes.
You
Yeah,
see
but
that?
I
Now,
don't think I would have taken a trade here. Like
yeah,
because
yeah,
for me, we were in a downtrend in the 4 hour.
yeah.
So yeah.
We
But
we
I
need
would
we
have
need confirmation.
yeah.
I
We
I
but
wouldn't even look at this. I wouldn't even look at this order block because I know for sure this will be taken out. I know that because
yeah.
there was no inducement. Inducement is the main thing. Okay,
Yes.
because now there's a lot of smart money traders. So now look at the charts. Now go back to your charts in the years 2004, 5 or something, and then look at the market. There's just one order block. Price comes back to that, and then it goes. That's it. Now
Yeah.
since there's a lot of smart money traders, they will create more and more traps. Okay, a trap
Yes.
where even the smart money traders would get trapped. Okay,
Yes. Yeah.
now what's special about this order block right here is the liquidity that's resting above it. Okay, now you see
Yes.
the stop losses and the sell stops